Hi guys, in this video I am going to share with you the details of term insurance plan, which I think is the best form of life insurance policy or best life insurance you can ever buy. If you are going to buy life insurance, then term plan has to be the first product that you need to buy. This is because it is pure risk cover plan. In other words, you don't get anything in return under the term plan unless there is death of the person insured. And that is the reason why term plans have lowest premium among all types of life insurance policies. A term plan, like most other life insurance policy, has a specific period. You can buy it for a specific period like for 5 years, 10 years, 20 years, etc. Let's say if a person takes a term plan for 20 years. Now, how does this policy work? Let's say the person insured dies in the 15th year. After taking the policy, his nominees will get the policy amount, that is the sum assured, also called as the policy value or the death benefit. But let us say the person insured survives the entire policy period, that is for 20 years. Then at the end of the 20 years, he will not get anything in return. Why do I consider term plan to be the best type of life insurance policy? Any other policy like money back policy or endowment policy has a term plan built into the product. For example, if you take a money back policy of 10 lakh, then it will have 10 lakh term insurance built into it. So 10 lakh money back policy or the money back policy of 10 lakh involves a term plan of 10 lakh plus some extra benefits. Those extra benefits are the payments that you get after a regular interval under the money back policy. So any other policy where you get something in return, even in case of survival of this person insured during the policy period, will have built-in term plan plus some other additional benefits. For example, let's compare term plan of rupees 10 lakhs and money back policy of rupees 10 lakhs. If you compare term plan premium of 10 lakhs and money back policy premium of rupees 10 lakhs, you will realize that the premium of money back policy is much higher as compared to the pure term plan. This is because the 10 lakh money back policy will have a built-in term plan of rupees 10 lakhs. So the premium of rupees 10 lakh money back policy will have the premium of term plan of rupees 10 lakhs plus some extra amount, and this extra amount that you will be paying will be for the extra benefit that you will get in the money back policy. And that extra benefit under money back policy is nothing but the money you are paid back by the insurance company at a regular interval, which is generally 3 years, 4 years, 5 years, etc. Let's say the annual premium of 10 lakh term plan is rupees 5,000. Then the premium of money back policy of rupees 10 lakhs would be much higher than the figure of term plan. Let's say it is 15,000. This 15,000 premium of money back policy includes 5,000 premium of term plan of rupees 10 lakhs plus some extra amount. The extra amount is 10,000 in our example. What insurance company will do is they will invest this extra premium that they collect from you so that they can give you some extra benefit. Like in money back policy, you get a certain percentage of policy amount back at a regular interval. So bottom line is, no matter which life insurance policy you are buying, there is a term plan built into it. So other life insurance policies like endowment plan or money back plan have two components. One is the risk component and second is the investment component. The risk component is nothing but the term plan built into the product, whereas investment component is that part of the product wherein extra premium is collected from the person insured, and the same is invested somewhere by the insurance company so that they can give you those extra benefits that are available under money back policy or endowment policy or other such type of policies where you get something in return. Under term plan you don't get anything in return if you survive the policy period. For example, if the term plan is taken for 10 years, then the nominee of the person insured gets the policy value or the sum assured only if the death of the person insured happens during the policy period, that is 10 years. If the death of the person insured does not happen during the policy period, that is 10 years, then neither the person insured nor his or her nominees get anything in return. But the biggest benefit that you get under term plan is that by paying a small premium, you will get a very good amount of life cover. For example, if you are planning to buy an endowment plan of rupees 10 lakhs, instead of buying endowment plan, if you plan to buy a term plan, then you may get a term plan of 1 crore or 1.5 crore or even more. Life insurance policy is basically meant for covering the risk of life, and the biggest cover you will get under term plan. So rather than mixing up both life insurance and investment, it is better to take term plan for your life insurance needs. And for investment you can use other forms of investments like mutual funds, etc., which may give you a better return than what you will get under products like money back policy or endowment policy. These days most of the life insurance policies also give you option to buy the policies online. So if you buy the term plan online, your premium gets reduced even further, because the premium that you pay for the term plan, which you buy through a commission agent, will include the commission of that agent, whereas the premium of online term plan will not include the commission of the agent. Okay, so let's see who should take the term plan. Anyone who is earning and has people dependent on him should take a term plan, so that if something happens to him, his dependents don't have to suffer financially. And the best way to secure your dependents would be to take a life insurance plan of a big amount rather than taking a life insurance plan of small amount via money back policy or endowment policy. Rather than taking money back policy or endowment policy of 10 lakh, in the same premium you will get a term plan which may be worth 10 to 15 times higher. This will secure the future needs of your dependents better. Rather than using products like money back policy or endowment policy for investments, it is better to use other better forms of investments for your investment needs and buy a term plan for your life insurance needs. What is the right time to buy the term plan? You should be buying a term plan or any other life insurance plan rather as early as possible, because premiums increase with age. The premium that you will have to pay for 1 crore term plan at the age of 25 will be much higher than the premium that you will have to pay for term plan of rupees 1 crore at the age of 18. I am assuming that the period of both the policies will be the same. The premium that you will pay at the age of 18 for 1 crore term plan for 20 years policy will be much lower as compared to the premium of 1 crore term plan which you take for 20 years at the age of 25. And as you know, the premium amount remains constant throughout the policy period. So earlier you start, lesser will be the premium for you. So what should be the policy amount of the term plan that you should buy? Ideally you should have a term plan with policy value not less than 10 times your annual income. For example, let's say your annual income is 12 lakh rupees, then you should at least take a term plan of rupees 1.2 crore. The more the better, but at least it should be 10 times of your annual income. Ideally, you should take a cover of 15 to 20 times of your annual income. So if your annual income is 12 lakh, then ideally you should have a cover of around 1.6 crore to 2.4 crore. While choosing the term plan, it is also important that you check the claim settlement ratio of the life insurance company. Claim settlement ratio shows how many claims does the life insurance company settle per 100 claims. For example, if say the claim settlement ratio of a company is 99%, it means that in a year if it receives 100 claims, it settles 99 claims and rejects one claim. So claim settlement ratio is also something which you need to keep in mind. Higher the claim settlement ratio, better it will be for you.